All right, let's get right into it. We're talking about a brand new feature from Jio Payments Bank called Savings Pro. And from the looks of it, this could be a total game changer for how we think about banking and investing here in India. But is it just a fancy high-return account, or is there a much bigger play at work? Well, let's break it all down. So, let me ask you something. Have you ever really thought about the money that's just sitting in your savings account? You know, that extra cash you have after all the bills are paid? It feels safe, right? But is it actually doing anything for you? Most of the time, nope. It's just kind of lounging around, being lazy.
And here's the crazy part. The big banks, they take your money, they lend it out, and they earn a solid 8 to 12% on it. And what do you get for providing them that cash? You get maybe 3% if you're lucky. Your money is working way harder for the bank than it is for you.
And that is exactly the problem Jio is coming after. They've rolled out what seems like a brilliantly simple fix to put your extra cash to work for, you. So here it is, the main hook. Your typical savings account gets you about 3%. But with Jio Savings Pro, we're talking about a potential return of around 6.5%. I mean, just look at that difference on the screen. It's more than double what you'd get normally. It's huge. So, what does that actually mean in terms of, real money? Let's say you keep a surplus of 1 lakh rupees in your account. A normal bank might give you 3,000 rupees in interest for the year. With Savings Pro, it's 6.5%. That same lakh earns you 6,500. That's an extra 3,500 rupees in your pocket, and you literally didn't have to do a thing.
So, what is this thing really? Well, at its heart, Savings Pro is basically an automatic investment feature. It takes the extra cash in your Jio Payments Bank account, anything over a limit that you set, and it automatically puts it into a super low-risk investment called an overnight mutual fund.
And they've made the process just unbelievably simple. You put money in your account, you set a minimum balance you want to keep, maybe 5,000 rupees, and that's it. Any cash that comes in above that amount gets put to work, automatically. Zero effort from your side. And if you're worried about all the usual stuff like hidden fees or your money getting locked away, they've thought of that too. There are absolutely no entry or exit fees, no lock-in periods, and you can pull out most of your money instantly if you need it. It's designed to give you those higher returns without any of the usual strings attached. Okay, this all sounds great for us, the customer, but this is where the story gets really interesting. Let's pull back the curtain and see what Jio's true strategy is here.
This is the big question, right? Offering double the returns with basically no fees, it almost sounds too good to be true. So what's the catch? What is Jio really getting out of all this?
And here's the secret. Savings Pro isn't really the final product. It's the front door. The amazing returns are a magnet to pull in millions of users for practically zero cost. And once you're inside their system, they can start offering you loans, insurance, brokerage services, all while using your financial data to know exactly what to offer you.
Now, if this whole strategy feels familiar, it's because it is. This is the exact same playbook they used in telecom. As one analysis puts it, what we saw happen in the telecom sector is about to happen in banking. You enter a market with an offer that's impossible to refuse, and you capture everyone. So what happens when a monster of a company like Jio unleashes this strategy on a sector as old and established as banking? Well, the shockwaves for the traditional players could be absolutely massive. For traditional banks, this is a direct attack. Their whole business runs on those cheap deposits from our savings accounts, the very cash that Jio is now siphoning away. And while the old banks are often seen as slow and clunky, Jio's slick, digital-first approach is tailor-made for the younger, tech-savvy generation.
And let's be crystal clear about this. This isn't some niche product for wealthy clients. Just like they did with their mobile launch, this is all about scale. This is designed for the massive, everyday retail and middle-class customer in India. It's a volume game, pure and simple.
Okay, so we've looked at the product, we've looked at the master plan. Let's bring this all back home. What does this whole banking shakeup actually mean for you, the average person?
Well, right now, it looks like a total win-win. We get higher returns, more flexibility with our own money. But you know what the biggest benefit might be? This kind of aggressive competition forces the entire industry to get better. Traditional banks now have to step up their game with better rates and services just to stay in the fight.
And the long-term difference for your own finances could be pretty staggering. Remember that extra 3,500 rupees a year we talked about? Over 10 years, that's 35,000 rupees. For an everyday saver, that is real, substantial money, Earn just by making a smarter choice about where your cash sleeps at night.
So let's zoom out one last time. We've watched Jio completely upend one of India's biggest industries. Now they're using the exact same strategy to go after another one. So the real question is, are we just looking at a clever new savings product, or is this the first shot fired in a revolution that's about to completely redefine banking for millions of us?